What's going on, everybody? Charles Boone here, the disciple of trend. Thank you for tuning in to the Dips to Rips. I am with the legend Howard Greenberg of the Crypto Crew. I got that a little mixed up there, Howard. I guess we're kind of just winding this up. We're doing this podcast a little later because of the technical difficulties I had during midweek. But now that the week is wrapped up, stock markets finished off with a bang. Crypto markets were not as strong, Howard. So what are your thoughts on that?
Well, I got to say, I wish we had our video that we started on Wednesday would have gone out, because it's one of the few times that two people argued and were both right.
At the same time, by the way.
Yeah. Because Charlie argued that the stock market was ready for a bounce. I argued that the crypto market definitely was not. And since both were so correlated, we were both very adamant that both were going to go up and down. But
this is why you folks should listen.
That's right. We actually both hit it right. So I mean, you nailed it with your side of it, quite honestly. Nice to see some tech come back. Seems like some common sense came back to the market. Is that what you think?
Yeah, part of it is also the end of the month, Howard. We have rebalancing. This is technically the second to last day of the month, which is usually where a lot of the rebalancing takes place. We have a long 3-day weekend. Remember, this market has been predominantly short overall. People mention bullishness, but it's only been bullish since Wednesday, technically, or Tuesday. So in theory, this is a lot of repositioning, liquidation, covering and rebalancing by funds books. The question is, will we open up on Tuesday, the last trading day of the month? And what will June 1st bring in order? They say sell in May, go away. And then when June comes around, you're supposed to buy in on the swoon, but it's a different market, man. Record inflation numbers, and Putin's still pressing the buttons, and oil today was going nuts to the upside because everybody assuming that this holiday weekend is going to be more expenditures, but the metrics of holiday spending may not be anywhere near the same levels as recently. It was reported today that gas spending is at like a 3-year low or 2-year low. So it's like people can't even afford to, take road trips. There's a viral video that's on TikTok right now of a dad who has a motorhome. It's a nice motorhome, and he was filling up with diesel. And by the time he was done, it was $1,000 to fill up his tank. So, we'll see.
I saw on CNBC today that a lot of the rentals in the Hamptons aren't getting filled this year.
That's
they
bad.
People spent, they did that last year. A lot of the travel, here, and a lot of, the international travel we're going to see, supposedly air travel. But I think you're right. I don't think we're going to see it on the streets, the drive-in travel that we saw.
And there's a lot of flight cancellations, airlines having trouble not filling the flights, but finding pilots for the flights here.
Right. Yeah, I saw a couple on Twitter, like you're saying today. I'm on my plane. There's no pilot, no first, officer. If you know
Where
one,
go?
Yeah. I mean, So there's labor supplies, labor shortage. Rather definitely an issue. Markets, for crypto, we're still just sort of slipping down. Earlier today, we set new lows for a lot of things for the 52-week again.
Wow.
Bitcoin was trying to hold 30 now, then it was 29. Now it's really like 28.5 at best.
So what do you think about crypto over this weekend here? Do you think that we just see it quiet? Because it hasn't really been that active. It's not like how the markets have been.
Volume's been so down. Everything's been the liquidations, the derivatives. That's what's killing us, is there's no spot volume. Usually that would lead us into a really, really slow Memorial Day weekend. But, in the world of crypto, that is usually exactly when we like to change it up. But no, I think we're just going to see low volume throughout the summer. We basically were in the same spot this time last year. We basically had our capitulation event about 2 weeks earlier this year than we did last year.
Right.
We trended down throughout all of June and most of July last year before starting up towards the end of July. So, following that same type of time frame. And, I think by then we'll start to get some better news, out of inflation numbers. Hopefully we've maxed out and we start, seeing eights become sevens and sevens become sixes here over the next couple of reports. I don't think it's transient. I'm not using that word transitory or anything else. I just think hopefully, where we start seeing at least a little bit of an improvement on the numbers.
Yeah, we have the CPI at the Fed meeting coming up soon. That's going to be really important in June for sure. There was a report today that was not talked about and pretty much ignored by the markets in the overall effect of consumer sentiment, which is always a bit of a indicator in terms of if recession is coming and the fears of recession is coming. It was slightly worse than expected, and the markets did pop off. But I have a feeling that we're going to reference this data point in the future when the markets start working lower. And, if that CPI number comes in at 8.3 or higher, that's where I think it's going to get very ugly for the equities market. Now, if we still see that retraction, then, that alleviates a lot of fears that we did see the peak of inflation, that the quote unquote transitory inflation, it really is, it will be temporary. Things will get settled with supply chains and energy costs will come down. But until they do, I can't speak for the crypto market, but I know for equities, it's going to still be a bit difficult to see the continuation of this rally to the upside. I like to take it. Yeah, I like to take advantage of it short term, but I flat out told people in the room, I'm like, we're going to ride it out while we can, but this is going to be a fade the rally move. And whether it's a small fade or it's going to turn into a large one, we don't know. But this market hasn't shown any signs of relief. Just because we made a nice move over the last 3 days, it really doesn't mean anything. It doesn't. I've quoted this before, but Michael Burry has been very active on Twitter as of late. And he keeps pointing out the biggest bounces or rallies that we've seen in the NASDAQ, and 12 of the biggest 20 have come in heavy depressed or heavily beared markets. So we wouldn't be surprised to see a 20% bounce from here. It would fit into the tune of the volatility in the extremes. And it's funny to say this, but the equities markets are moving on a bigger extreme than the crypto markets right now. Who would have ever thought?
Right.
Who would have ever thought that, Howard?
No, not at all. Not at all. The only thing I'll say about Michael Burry, and I think I talked to you about this earlier on the show we were on. That guy just predicts everything's going down every January twice in the last 12 years.
Yeah, he's been really aggressive since last year. He's been really aggressive. He's about a year and a half early, but he's been really aggressive.
Yeah. But
Ray Dalio, he did his public tour. He came out and said that as well.
No, everybody is, and everybody's saying the same thing. In crypto, we just call it the bull trap. The bull trap. That's what it is. They trap the bulls back in. Everybody wants to hear good news. Everybody wants things. Everybody wants the bottom to be done. So at least, and I think that's what equity saw. I think crypto saw a little of that. Before you did it, Monday and Tuesday, we actually popped up a little bit.
You did.
So I think, and I think part of that was, we were at the downs of down with Luna crashing and all of that. So you couldn't get much more negative. From there, we got a little natural, dip to rip. But that was really a bull trap. That's what I called it out as. And you can see we're right back at those numbers. So, and that's what you're saying in the equities, I think, right?
Yeah. And, you've actually navigated pretty well because I've seen your signals. I've seen you put out your profit targets, and you're playing in a lot of alts more than the actual mains. And I think it's because you're seeing a little bit more clarity in terms of demand. And that's kind of what I did with my side of trading. Although I did get aggressive in the Qs, I was playing in a lot of names that were undervalued with great upside. I really like the small caps, but I don't really trust growth plays right now. So I went with more of the blue chippers. I didn't do well on the McDonald's short. I ended up losing there, but I made more than enough on the Boeing upside. rode out the energy in EOG to new 52-week highs, caught the cues. I clearly left some on the table, but like you said, trying to go long in a strong bear market, I'm never upset walking away a winner when I'm working as a buyer. And I told the clients that they could work out and hold as well. So, this is where a lot of people, especially nowadays, get into this woe is me. I'm not touching anything because I don't want to trust it. But, I feel like they're missing out on opportunities. And Howard, you've been really patient. I've been really patient as well. And what I really, really appreciate about you is that when you did see clarity and did see opportunity, you didn't hesitate to jump on them. And, that's what pros do. That's what legends in the markets really do. We're looking for opportunities in the fear. We're not letting the outside noise get in the way. And, I guess I wanted to kind of steer this to, what did you see from your visual standpoint? Because you're obviously extremely knowledgeable about projects and, just crypto itself, but you're also a chartist. You're also a technician. You're also a trader. So what did you see that kind of drew your interest and said, hey, now's the time?
Yeah. I mean, and to be honest, I have to be honest, I missed a couple where I did the opposite. I didn't get us out quick enough. We closed them out today because I'm not leaving anything open over the holiday weekend. Unlike you, my markets run 24/7 through the rest of it. So we closed out a couple today at losses that should have both been winners, Ave and Sand. And, what I've got to see right now is I've got to see the same indication from all three charts that I use, the daily, the 4-hour, and the hour. So if I see where we just broke through resistance on all three, we're towards the bottom of the linear regression on all three, or at least not near the top on any of them, you know what I mean? Right. I've got to see a lot of confirmation where I normally would just be looking at one chart, probably. Usually for our swing trades, I'm using a 4-hour chart because, again, I go 24/7.
Sure.
So, that's the one I tend to use. But, now I need to see it on all of them. And I'm got to be happy to take a 10% or a 7% winner and walk off the table. That's where I made a mistake. Like I said, Sand yesterday, it went up to a quick winner, and I should have had that stop loss pulled up quick enough to get us, out with a tie instead of a short loss.
And that's okay, Howard, because obviously, one, you went through multiple layers of confirmation, which is a good point in this market environment. What was working before obviously is not going to be the same under different market conditions. So, you want to make sure in that sense, because it's others that are trying to follow along as well as they're trying to learn under this environment. And for me, the big positive in this isn't even that you're, had it as a winner. It's about the risk management, because once you realize it's not going to work out or you're wrong, you just have to cut bait. You just can't keep holding on. And that's the most devastating aspect. You and I had talked about that too, because this is something that people don't know and or to feel way too comfortable with the theory that it's not a loser until you sell it. But then, they may be down 0.5% on their portfolio, and before they know it, in 2 months, they're down 40% on their portfolio because they made that snippy little judgment. And, this is tried and true in your market. This is tried and true in my market. I asked the people that are holding PayPal over $200, that are holding Facebook above $300 right now. Maybe they'll come back, but maybe it's going to take 2.5 years. And with that money tied up, what's going to happen in those 2.5 years that you could have possibly banked big time on? So, for me, I feel like that's true leadership in the sense that we're also teaching people when you're wrong, you got to cut your losers fast and make sure as a trader, our first job is always not to make money, but capital preservation. I want to make that very, very important, because the longer you stay in the game, the better chance you have of getting that ideal, outpacing the market return or potentially putting yourself in a position for generational wealth. So well done, sir.
Well, my other thing was, I also thought that we were going to follow up with you once NASDAQ took off, once SPY took off. I said, okay, that correlation is going to come in. Right. We're going to catch fire in the morning. And I was like, well, wait a second. We started off strong at 9 this morning. And then by 10, it was all gone. I mean, so that was the other part is I think I played the correlation a little too strong.
Well, no, but let's look at the flip side in this. You recognize that that correlation wasn't here. So something abnormally from what's been happening isn't happening. And again, that's part of the recognition as a trader, which is really important. So kudos, man. This is big for me as a trader. I always, a lot of people always talk about their biggest winners. I don't, as long as I've been in the game and as successful as I've been, I never remember my biggest winners. I honestly don't, but I sure as hell always remember my biggest losers. And those are the things that haunt me and kind of help me prevent from ever feeling or being in that position ever again. Because, I mean, listen, anybody that's had success in the markets in crypto have also dealt with pain. They go hand in hand. You hear about all those motivational talks from Michael Jordan. That's a great example as well, right? He didn't make his basketball team as a freshman. He almost didn't even make it as a junior overall. He ended up wanting to quit to play baseball, and his parents had to convince him otherwise. Maybe they just recognized he was going to be a better basketball player than baseball player, yep. Which turned out to be true because he tried his hand in both. But nonetheless, he didn't give up and he worked harder and he survived to live another day. And then he became Michael Jordan. So you just never know. That's really where I'm a big believer, and especially in the trading world. You could judge people by big ass wins, but they could have that huge home run win and then get killed on the next 99 trades. Are they really the genius, or do they really just time it well and get lucky?
Right. Tripped over that acorn.
That is very true, sir. I feel like this market right now wants to be a buyer. Like people are thirsting and chomping at the bit. And one thing that I keep telling people is that that's the moment you realize that the quote unquote trap could come into play. You mentioned the buy trap earlier that took place. And maybe we're starting to see, a foreshadowing of that happens in crypto leading into the markets. Because, since you pointed out, there's been a very stark correlation with how growth has traded in the stock markets. That always, supersedes what crypto did either the night before or the morning before. So, for me, even though there may have been some divergence today, I think it's going to be really important to keep an eye on that going forward. Do you think that there's a little bit of truth to this correlation? Like, does it make sense to you that there's correlation there?
So I should start with, I think that there are two things. There is Bitcoin, and then there is all other crypto. So all other crypto, yeah, that's tech, it's software. Mm-hmm. We've talked about that in the past. That's what it is. So it's exactly like, your tech stocks. Bitcoin should not. Bitcoin should be trading more like gold. It is scarce. At some point that will start to play out. Yep. I don't have a doubt that is the case. It will play out. It's just a matter of when does it play out. There's just not enough to go around, and more people want it every day.
Right. General. And in turn, that should be a big propellant for price to go up. And a lot, for example, the FUD that we always hear about, I always talk about these market movements are truly, we could talk about algorithms all we want, but algorithms, all they're doing is reading and registering human emotion. The ins and outs and the inflow and outflow, the exiting and elation and devastation. These are what price movements in at least the equity market is attributed to. It is a basis of human emotion, panic selling, FOMO buying, over leverage, trying to be greedy, panicking at the worst moments after they're beyond the threshold of panicking.
Right, you've already taken your pain. You should decide at the end as when they capitulate. Yeah, I mean, I'm with you on that for sure.
So, we talked about in our last podcast about painting a rosy picture, or if there's a painting of a rosy picture in crypto. And you're talking, you've been mentioning a lot about not so much seasonality, but, the timing mechanism, because a lot of what crypto has done has mirrored what we saw last year. And then around what did you say, late June, early July is when the market started catching a bid?
Well, yeah, we dropped down. We were a little bit earlier at capitulating here this year. Last year, it was like the third week in May. This year, it was the first week in May.
Okay.
So we saw the big drop.
So
and then we slow volume through the summer. Again, and generally what you see is a lot of people are on vacation. Traders go on vacation. The kids are home, whatever it is. You see volumes on the New York Stock Exchange, dry up, never mind when you get to the crypto. Especially you start to take Europe into effect come June, July.
Yeah.
That's when they take their entire months off. We think that's a joke here in the US. It's not. As somebody who's dealt with supply chain in the liquor business and wine business with Europe, try to reach someone in France in July. Good luck. It's just not happening. It's not happening. They don't care what you need. So that's what you tend to see. It slows down anyways. And that's what I think that's the other part. I think we're going to see that. And then, like you said, social sentiment is a huge part of crypto. If you look at the Google search on Bitcoin or whatever it might be, it's amazing how it correlates with the price. And that's where the momentum comes in. The FOMO, all that is a big part of it. Sure. It's amazing, all the memes that you've seen, but it's true. The most true in crypto out of any of them. They love buying Bitcoin at 50, but they don't like buying it at 25.
Yeah. And you and I have discussed this before. It seems like the stock market and the crypto market are the only two places where people are absolutely comfortable buying at a premium price and absolutely terrified of buying things on a fire sale. But when we try to shop for homes, we shop for cars, we shop for clothes, we're always looking for a deal, unless you're like a super duper billionaire who doesn't care. But we're always looking for some sort of deal. We're always looking for some sort of break. And then the one thing that's going to truly make you money, it's like, well, I'd rather do the total opposite. And, you and I both look at it a lot differently like that than that. We know the risks of buying at peak values. We know that like this is the time where we're like starting to rub our hands and, really thinking about the 5-year plan, 10-year plan down the road, because we know that the actions that we take now are going to benefit the older version of us. So keep that in mind, folks. If you've been very comfortable buying at the highs and you're terrified buying at the lows here, slap yourself. I mean, and you said something earlier too. It's about, you should have a thesis and then you stick to that thesis unless the thesis change. My thesis is Bitcoin under 30,000 value. Bitcoin over 50,000 not value. That hasn't changed. You know what I mean? But it does for people, like you said, where people don't get out at certain times, or they don't look at it and say, this is value now. If you're looking at PayPal and you think PayPal has a future, like I went in on Square, I told you, I think that Jack Dorsey is one of the smartest people in Bitcoin, if not, right up there. And, what he's doing with that company and the way that they're going to integrate the Lightning Network and the first few things they've already started to pilot out look amazing. They're going to be completely transformative to what the payment system looks like. And it's going to completely change everything. We're seeing it. You're seeing every day that Swift was talking about it at Davos. They're adopting blockchain again. Stripe just partnered again to get back into it. Right. It is the quickest and best ways. And this guy's got it, so I'm going to bet on him. I think Stripe news was huge, by the way.
Yeah. Oh, yeah.
In my opinion. Yeah. Jack Dorsey's no shill, right? He's not. Yeah. He's a true believer in this. He knows that there needs to be a change.
That's what his focus is right now, is all about Bitcoin. So, so I'll bet on him. So again, I looked and I said, you know what? I think that company is going to be better in 5 years than it is today. Without a doubt. Much more profitable. So I got some, is today the bottom? I don't know, but you know what? It's at a good value for me now. It's much better value today than it was 4 months ago.
Right. This is where we nibble. This is where you accumulate. Yep. The price you buy now isn't going to be the price that's going to be reflected on your portfolio, at the end of it, because when you accumulate, you cost average that price. So whatever your cost basis pricing is, it's going to shift, because if it does drop 10%, you nibble a little bit more, and drops 20%, you nibble a little bit more, and jumps up 15%, you nibble a little bit more. It's all going to have an effect on the actual pricing. But the name of the game is, where's it going to be 5 and 10 years down the road? And if we're 3 to 5x that, then, well, You made a smart decision, obviously, and looking in the long run. And, for me, a lot of the investment idea, people are always looking in a way of how can I get rich? And it shouldn't. It should be more into, is this company a quality company that's going to show growth in the long run? And okay, is this value in comparison to where the long-term growth is? And truthfully, if we put ourselves and put our money into companies that we believe in, right, and that we've looked into, we're not looking for the next pumper. It'd be nice, of course, that we could get rich off of just one deal, but that's not really what long-term investment is about. Investment is always going to be yield, right? Return on your investment. And you're going to put yourself in a greater position of success going with higher quality, higher conviction plays, as opposed to taking YOLO bets, trying to get rich off of one hit, which is exactly what the option market is like at times.
That's the problem with leverage crypto trading. It's the same thing. These people
home run hitters,
they're making bets on crypto instead of investing in crypto.
Yeah, you're right.
That's part of a problem. I think that the derivative market in general, across all of it, is gotten a little bit out of hand.
So let's talk about that really quick. So how do you feel about the people that are purely into crypto just because it's volatile, that don't give a crap if projects crap out, that don't really give a crap about where Bitcoin goes as long as it moves? How do you feel about that liquidity being involved in the crypto market?
Tell you what, I'll give them my sign up code for DraftKings. That's where they should go.
Give me my bonus.
Just go to DraftKings and go play the volatility there.
It's funny that you say that, because that kind of attitude where we see with sports bets now, like the YOLO parlays, that's really what translates into the options
$5 to win. Yeah, they see someone on TikTok win, so they all want to know that.
Yeah.
You've seen it. How many, we get students that will ask, how do I get the next 5X? Well, can we get the first 1X first? And then we'll work on, first you got to get to 1X.
1X before we get to 5X. Yeah, you are absolutely. You and I, Howard, you and I. And it's not just the glasses, okay?
Yeah. So, yeah. But people, that's it. It's, having that thesis, having that value, understanding, sticking to your philosophies. Sometimes no trade is the trade. For me right now, we don't have a lot of ways to access the short side of crypto here in the US. Like I said, this derivative market thing, which is where we were, is a disaster, and it shouldn't be there. And it's not even actually allowed in the US. So a lot of these people are using VPNs, or they're not, and they're saying that they don't live in the US so that they can participate in this 20X, 50X, 100X leverage. And as I've said in the past, the problem is that people don't understand what they're even doing.
They really don't.
And then what really blew me away is I was looking, I'm a big fan of, or I was a big fan of Sam Bankman-Fried and the folks over at FTX. I am now very anti them. And part of that is that I looked on their site because he was in front of the CFTC, and he wants to bring derivatives that are in line with what happens overseas here to the US. And I think he's doing the crypto a disservice. His company offers derivatives on Constitution DAO. That was the NFT project that was trying to buy the copy of the Constitution that didn't.
That's right. That's right.
And now they're trying to figure out what to do with the money, and they're going to do something. They sell derivatives of that. Come on, man. It's one thing if it's a top. I'll even give it the top 100. But come on, if something's not in the top 100, why do you need to have a derivative? The idea of commodities and derivatives, the way that the commodities or the derivative market was formed was so that farmers could hedge against the fact that their crops could not come out.
These guys have to pay for the sponsorship deal somehow, right?
Yeah, they got to pay Tom Brady another $400 million.
And Steph Curry hold on, Howard. Let's bring this back here. So this time last year, okay. Well, let's just say this: when we were trading upwards 55,000 plus, right, in BTC, did you think that we would see a pullback as deep as we have?
No, not as deep as we have. I mean, I didn't realize. I mean, the China part you can't really play into it, and that
Right,
you can't discount that because that really is a big part of where we're at today.
That
but I
is
think
true.
what you're asking is more what I have felt all along and have said all along is leverage got us to 70,000 and leverage brought us back down to 20. Is if we didn't have leverage, we probably would be somewhere in the 30,000 range where we are now, but it would have been done in a way that was much more sustainable, had been better for the crypto ecosystem because the investors that came in would have been buying Bitcoin, not betting on the price of Bitcoin, which is what they do. And they would have been acquiring equity and they would have been building something. And we wouldn't have gotten that huge run up that we got and the increase. And our adoption rate would have gone a little bit more in line with how it should have. I mean, we started outpacing the internet's adoption rate. That is a little too quick.
I'm going to say this. Howard Greenberg of 2027 is going to look back and think that liquidity that got blown out to drive BTC down here again, because 5 years down the road, while I don't believe in like Chamit's targets and Kathy Wood's targets as of yet, meaning their far end target, I do believe in the 150 target. I do believe that's going to be, I don't want to say the peak because I have no idea, right? But I believe that that's going to be a threshold level that this market could achieve. And again, one of the dynamics that I totally understand about BTC is that there is a limited supply and there's only so much BTC out there. And that's what makes it very, very different, because when the demand is awesome in BTC, we know for a fact that it could go 2x, 3x in a very short period of time. We're not talking about a day or two, but within a year, it's absolutely possible. And it's not artificially driven, so to speak. I mean, there are some leverage plays, but when the demand is real, the demand is freaking real in BTC. So I think 5 years down the road, we may look back at this podcast and we'll be like, yeah, thank you, liquidity. I appreciate you getting blown out because you are now making me a much richer man. So it's.
I told you flat out, I'm trying to acquire another Bitcoin right now. Well,
I know you are, man. You talk the talk and you walk the walk for sure. Yeah. So let's kind of lead this to, we're seeing the quiet period in crypto, right? And the stock market is pretty active, but truth be told, the daily volume is actually a lot lighter, which leads to what you were saying about this time of the year in the equity markets, right? Let's bring this to the NFT market. We've seen that the NFT market has gotten very quiet and the floors are slowly sliding down. There was a funny story. I just randomly saw it trending on Twitter, but Seth Green was talking about getting hacked, right? What did he end up losing? He ended up losing a BAYC.
Well, now it's come full circle because the guy who ended up buying it. So Seth Green owned a Bored Ape Yacht Club.
Yeah, Mutant.
A few of them. He owned one of those, a couple of Mutant Apes, a Doodle, some other very blue chip cheese. And one of the main components that makes Bored Ape Yacht Club so valuable is that you get the commercial rights of it.
Right.
And you can use them how you want. And we've seen that out where you are in Colorado. There's weed strains that are different Bored Ape Yacht Clubs. There are beer, there are companies that have done beer labels, wine labels, all kinds of things.
They do investment parties and stuff like that too.
So Seth Green had taken it to a whole different level, and he's actually doing a pilot for a TV show and using the Bored Ape Yacht Club as the main character. So, an animated show, as we know, he's part of Family Guy and all that.
Right.
So the same type of thing. Well, recently, leading into the launch of the other side's land sale, there was a lot of, which was part of Yuga Labs and the Bored Ape Yacht Club also, there was a lot of phishing schemes that were out there, and they're still out there. It's terrible.
Oh, there's tons of them.
And he clicked on a link by mistake, or not by mistake. He just shouldn't have clicked on a link that he did. Yeah. And he gave access to someone who stole all of his NFTs, including that Bored Ape Yacht Club.
So he lost all of them?
Yeah, well, yeah. I mean, all the ones he had. Yeah. I mean, he had one Bored Ape and then, like I said, 2 mutants and a Doodles, but a lot of money involved. And more importantly, from there. And what happens that makes it a lot worse is, of course, that got sold to somebody else that was unsuspecting, that paid legitimately on OpenSea and thought that they bought a Bored Ape Yacht Club, but in reality, they bought a stolen one. Right. Then you saw there was a lot of argument back and forth. Could he still go and do it? Because OpenSea is in New York Supreme Court, going back to a decision about Holocaust paintings taken from Jews in Germany, have sided with the fact that even if you get illicit goods on the second, third, fourth, fifth, or sixth market, if you thought they were legitimate, does not matter. The title, which is, goes with them, would not be valid. So a lot of talk that the guy would have to give it up anyways. Turns out that they made a deal, and they're gonna handle it without having to go to court or anything else. But it was a little bit of craziness, and we're seeing a lot of phishing schemes, a lot of this stuff, and that's the other part too, is people say, oh, it's all crypto. No, you've seen it on Discord. It's they're getting people by hacking Discords and then just social engineering from there, the same way that they did everything else. So
it's also Twitter. It's all social media. It's anywhere where you can share a private conversation with that individual.
Yeah.
There's influencers before Seth Green. There's one major influencer. I remember sending you the tweet thread who
he was doing a live stream and they were taking the money from him.
Yeah. This was a slightly different one. This guy had this was when Moonbirds were really hot, and he had a few of them. And he thought he was talking to the founders of I think it was either a Moonbird project or it was another project that he was just getting into, and they were doing the same thing. They did research on the individual. They talked directly about, like, so one of the ties was the guy went to Stanford. They did research, found out certain professors that the guy may have had class with, name dropped those professors, gained that guy's trust. But at the last second, the dude realized something felt off and decided not to send out his information. And he said that if he did, he would have lost nearly $1 million.
It was Moonbird. Yeah, that was the guy. And what it was is they wanted to use the same way that a few other, and actually I saw that a hedge fund, crypto hedge fund guy just got taken in this, where they were using a it's called peer-to-peer.io.
Yeah.
That's what it was. The whole trying to avoid paying a commission fee or whatever. I get it, but it's just, again, it's like meeting the guy in the dark alley with $100 bills.
Yeah, guys, it's not really worth it.
Yeah,
let's just be smart. I understand.
Sorry.
I understand the idea of wealth and, things that you may not be familiar with, such as like even with equities trading, with crypto trading, or how the dynamics of the markets are. That's fine. But we need to use a lot of common sense here, folks, because this is your hard-earned money. These are truly valuable assets, and you just never know. You just never know who's out there. The internet, it doesn't matter. There's no race. There's no rhyme. There's no reason. But there is a lot of greed. There is a lot of evil on the internet, and they don't care. They don't know your name. They don't know who you are as an individual. They have no problem stealing from you. So be smart, protect yourself. Having, something as simple as an external hard wallet could save you a lot of heartache and pain as well, instead of just keeping it all stored on a MetaMask, which is served on a cloud. And, all it takes is 12 little words to give it all up, right? So
or even on an exchange. I just had someone send me a message saying their W Luna disappeared from their Coinbase wallet, which I'm sure means Coinbase just stopped dealing with it.
Yeah.
And there's an airdrop coming tomorrow. It might not be worth anything, but this guy's mad because he's like, well, what do you mean? I don't get that airdrop? Well, you shouldn't have left W Luna on Coinbase.
Right.
That's part of it.
Yeah. We talked about that. Scott had asked about that recently, but, my friends and I do a white elephant, which is just a random gift exchange. You just bring a gift and it'll eventually land in someone's hands. And the most popular gift this year, Nano Ledger.
Yeah, they're great. Oh, everybody should have a digital wallet, without a doubt.
Yeah. we're going to wrap this up here really quickly, but let's just wrap this up with this, folks. Here are my thoughts on the broad markets going forward here. I think the S&P 500 is definitely going to make a run to 4,200. There's a lot of chatter about 420 and SPY. I think it could actually peak out around 425 to 427. I think the NASDAQ still has room to maneuver. The 317 price level in the Qs is where I'm watching. I think the eventual run up is somewhere around 325 to 327s. And certainly this is going to be really good. We'll know that the markets are really in a good spot if all three of these sectors start running, not just tech, but all three of these sectors within tech. Number one, semiconductors. That's going to be really important. You want to just track the broad semis. You can look at ETFs like SMH, SOXX, SOXL. Number two, cloud names. Now, we don't want to just talk about Microsoft and Amazon and Google when we talk about cloud. It's more like look at names like TWLO and SNOW, SNOW, and DDOG. I think those are going to be really important names to watch. And then number three, it's going to be cybersecurity names. PANW is going to be really important, but Zscaler was really strong today. ZS, one of my favorites out of the sector, Zscaler, and CRWD reports earnings next week. So they report well and move. Names like Sentinel, which is a small cap, NET, which is Cloudflare, which if you've ever seen, you click on a link and it says, wait here. If the page doesn't reload in 5 seconds, click this link. And it usually says Cloudflare there. That's NET. I think if these stocks all catch a bid and these sectors catch a bid, the market's in a real good place and we'll see those numbers. But if we start seeing rollovers here and there, or we see 1 out of the 3 or 2 out of the 3, just be careful, folks, because all it takes is just one day. We've seen it here twice over the last week and a half. One day where the NASDAQ is going to melt off with nearly 5%. And, it's always talked about in the news, but it never feels like it. It's just slow and controlled and just straight directional. And you just don't want to get caught in that trap, because those are the days where stocks are down 16%, 20%. And, when we talk about names like Zscaler and PANW, we're not talking about $10 stocks here, right? We're talking $100 plus, 200 plus, 300 plus, 400 plus. So just keep that in mind. Howard, what about for you? What are your thoughts about crypto in the near term?
I'm looking at 30,500. We got to get back above that in Bitcoin to feel like we've, stopped the bleeding for now. Downside right now is still about 27. I think over the weekend we could hit as low as that.
Oh, very quick.
I think we'll stay. Yeah, I could see it. Like I said, I think you could see something try to, the bears are going to try to do what they can to break. They try to get us usually Sunday nights on Memorial weekends like this.
After you've had a few pops there, huh?
There's no one left to defend the castle. They take us out. Yeah.
So it's progressively sideways more until we get above that 30 half.
Outside of DCA, I would just be on the sidelines, have powder ready to go. When you see anything under 27, start buying. Great
idea. Same thing with equities, guys. Been telling people, make sure you save a lot of cash for those favorable, and high quality names that you absolutely love. It's not like Google's going to go anywhere. Microsoft is going to go anywhere. Apple's going to go anywhere. Truth be told, these are the companies that you want to play into long run. Even Tesla. Listen, if Tesla gets ever into the 400, 300, 200, what are we thinking? We're just going to watch it keep going lower? No, people are going to be buying in. This is Tesla. How many times does it run to $1,000? Well, it did it once pre-split and it did it once after the split, right? So if it did it after the split, it could do it again. And even if it doesn't get up to $1,000 from 400, if it just gets to even $700, $500, $600, we're talking about monumental returns in a short period of time. So just keep that in mind. Just like Howard said, keep that cash on the sidelines. And ladies and gentlemen, if you loved what you heard today, if you love this little dynamic back and forth, the information that we provide, please do me a favor, folks. Click on the like, subscribe, share with your friends. I don't know what social media outlet. I don't know if this is going to be on YouTube. Wherever it is, wherever you can share, please do. This is the ever so impressive legend, Mr. Howard Greenberg, and myself, Charles Moon. We are Dips to Rips podcast. Catch you next time, folks. Peace and love.
Have a great week, everybody.
This has been Dips to Rips with Howard Greenberg and Charlie Moon, brought to you by Prosper Trading Academy. Visit us at prospertrading.com to find out more. This podcast should not be considered professional, financial, and/or investment advice. By accessing this podcast, you acknowledge that Prosper Trading Academy LLC, PTA, makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information and opinions presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. PTA does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the PTA. PTA assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials of the third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein. Moreover, PTA makes no warranty that this podcast or server that it makes it available is free of viruses, worms, or other elements of codes that manifest contaminating or destructive properties. PTA expressly disclaims any and all liability or responsibility for any direct, indirect, incidental, special, consequential, or other damages arising out of any individual's use of, reference to, reliance on, or inability to use this podcast or the information presented in this podcast.